You, Sushant, Supreet all talk about how important it is to get a term insurance. There is any one reason why I should not go in for a ULIP?
So if it is an insurance product, then why would you talk about returns there?
Basically, what you're saying is the coverage that ULIP is offering does not even cover that much.
Right. So
This does sound like a good investment plan, doesn't it?
So always separate your investments and your insurance.
Now, what does Ditto recommend? Is it ULIPs or term insurance plus mutual funds? Hi folks, welcome to Ditto Insurance. I am Shashank, your host, and I am joined by Ajay, our senior advisor at Ditto. He has helped over 5,000 people get an insurance. Welcome, Ajay.
Hi Shashank, glad to be here.
So Ajay, I have to tell you something. I have recently taken a lot of interest into mutual funds. I have accumulated some money. I want to grow it now. Right. But I've also heard you, Sushant, Supreet all talk about how important it is to get a term insurance,
That's true.
as a safety net. But let me also tell you, recently I came across a product, ULIP plan, where the advertisement said that I get a staggering 22% return on small cap fund, and not just that, a term insurance for myself. Now, that sounds like a great plan because I just need to have an e-mandate. I don't have the headache of choosing a mutual fund to invest in. I don't have to do any research. Plus, my family is covered as well at the end of the day. So that's a peace of mind for me. But you tell me if there is any one reason why I should not go in for a ULIP.
Right, that makes a lot of sense. I mean, if I'm looking at an investment, I'm going to look at the returns.
Correct.
And you probably think that the insurance part of it is covered as well. So why do I need to look at insurance separately, wherein I just want to make my money grow multifold?
Correct.
Right. So that is what you'd be looking at. But did you see what is the actual insurance coverage that they're offering you?
I don't exactly remember, but since it's an insurance product, it should have a coverage, right?
Right. So if it is an insurance product, then why would you talk about returns there?
I am looking at it as an instrument which can also make me money while also assuring me that if something happens to me, my family is covered.
Exactly. So this is the point that ULIPs play on, right?
Okay.
So they're looking at how to give multiple benefits, but you need to look at, is that even adequate, right? So if I'm looking at a life cover, right? So is it serving the purpose, right? I do understand that there is a certain aspect of investments involved. It makes it more lucrative as a product.
Yeah.
Right. But if I am going to look at things and evaluate it purely on the basis of insurance,
Okay.
right? Because I'm paying for that as well, right?
Correct.
So the ULIP is charging you money for that.
Correct.
Is that really adequate is what I would first see.
Right. But can you break down the adequacy part? Because
So let's look at it this way, right? So most ULIPs, they probably just offer 10x whatever is your fund value.
I mean, that should be enough, right?
Not really, right? So say maximum I've seen ULIPs offer say 10 times could be around 25 lakhs, or max to max I've seen around 50 lakhs.
Okay.
Right? Maybe 50 lakhs seems like a pretty big amount right now to you.
Okay.
Right?
Yeah, it is.
So, but if you look at things like right now, how old are you?
I'm 25.
Okay, and do you have any major dependents at the moment?
I just have my parents, my mom and dad.
Understood. And probably they're not really dependent on you at
Yeah.
the moment. Maybe not that much.
They're
They
not
probably
that
have
much,
their
yeah.
retirement plan done.
Correct.
Right. So I mean, you're not really having any dependence, and that's why you're not looking into the future. And that's why you need a term advisor to look at things in the future.
Correct.
Right. So if you see, I mean, even if someone is say running a family and living a decent standard of life in say a city like Bangalore,
Okay.
right, you'd probably need somewhere to the tune of 40K minimum.
Correct.
Minimum
Every
around
month.
40K.
Yeah.
Right. So if you see that monthly you need around 40K.
And that is in 2024 that you're
Yes,
talking. Okay.
yes, 2024, and you see inflation, it's somewhere around 5 to 6%.
Correct.
Right. So this is me being a little,
Yeah. Got it.
on the lower end. Right. So I mean, with inflation on the line, right. So year on year, if I'm going to inflate that expense,
Okay.
right. So I mean, that's around what, 4,80,000,
Correct.
right, per year.
Correct.
So round off about
4,80,000.
5 lakhs is your
Correct.
thing, right? So I mean, this is like a bare minimum, right?
Correct.
Imagine this is something your dependents would be needing. Probably, you know, if you're having a kid or, you know, your spouse might be partly dependent.
Correct.
Right? So in the event of the demise, right, so they should be able to sustain at least that 40K worth of expense.
So you're saying
Yeah.
5 lakh
Yeah.
is the expense that
Yeah.
I would maybe incur in a year.
Correct.
And maybe multiplying it into 10 would give me 50 lakhs.
Yes.
So basically what you're saying is the coverage that ULIP is offering does not even cover
exactly
that much.
Right. So see, even if it's the 5 lakh is inflation adjusted for the next 10 years, it's not going to cover you.
Yeah,
Right?
it
So,
makes sense.
I mean, if you see, we look at a lot of factors while calculating the term insurance cover. We look at a particular formula called as the NPV, which is the net present value, where we assume that you know, the so and so sum insured is put in an FD, without any risk, right, as in a risk-free return, and the corpus should be sufficient to be taking care of your monthly expenses, quote unquote here, which is the 40,000. Right. So the 40,000 I should be able to take care of, right?
Understood.
Yeah. So based on that, we'll help you with the calculation, which, I mean, usually at least 30, 35 years down the line, you will need the term insurance, because that is when you'll probably get retired. Since you said you're 25 right now, right? So probably for the next 30 years, you might be needing the plan till when you're retiring, and, you know, your dependents are probably in a situation where you're at right now.
Correct.
Right. So, yeah.
I get the part about this not being a great insurance product, but this does sound like a good investment plan, doesn't it? Because 22% small cap fund, it has to amount to something, right?
That sounds, you know, correct. But when you're looking at things in hindsight, right? So 22%, you know, though it sounds like a good thing, you got to see what overall in small caps, what kind of returns they are actually giving. And I mean, where does this, you know, come into picture, right? And when you see ULIPs, right? So there are a lot of, you know, fees that goes into it, right? So you've got like fund allocation charges, where your fund manager is probably going to charge a particular fee, right, for you to, you know, manage your funds.
And how much is that range between?
I've seen somewhere around, you know, 1.5 to 2%. Is where I see, which doesn't sound a lot, but it is, right? When you look at the, you know, amount of money that's being, the corpus that's being invested.
Right? And any other charges?
Yeah, you do have the premium allocation charges, where a part of that amount just probably goes to your insurance premiums. Right? So that, and they also charge certain postage charges and stamp duties which go into it. Right? So there are multiple charges which go, which you might not be aware of. Right? So you might as well just look at good small cap funds. Right? Look at how they've been performing, look at their CAGR. Right? So those are things, and again, if you're, you know, probably doing SIPs, then probably look at the XIRR that you're looking at. Based on that, you can track those aspects, where I feel from an investment perspective, the small cap funds, you know, look at these metrics and, you know, make a more informed choice, rather than taking a plan saying that, okay, it's giving me the benefit of insurance and investments. Right. So I would probably, you know, want to see whether the insurance part is fully taken care of, and the investment part is probably, you know, been done, the evaluation is done correctly. Rather than seeing the most number of benefits, I want to see that my benefit for the said thing, for example, as an investment, is this the best decision which is going to maximize my returns?
Now, what does Ditto recommend? Is it ULIPs or term insurance plus mutual funds?
So Ditto, definitely, you know, like I've been saying till now, right? So we would suggest to go for a pure term insurance with probably some good riders, right? So like critical illness, or say waiver of premiums, where these are, you know, purely insurance focused, right? So, and so that you're doing justice to the premiums you're paying. Right, and you're getting an adequate cover, which again, a term insurance advisor, trusted advisor, would be assisting you with. Right, because if you're going to look into the future, which is around 10-15 years down the line, what it's going to be like, the advisor is much more likely to help you out, because they've been advising thousands of people.
Makes sense. Makes sense. And folks, this is what I've been trying to tell you. We at Ditto are not just here to push insurance policies to you. We help you understand, compare, and buy the right policy which is fit for you. We are backed by Zerodha, and we have a 4.9/5 rating on Google. Feel free to book a free of cost consultation call with any of our advisors with a link in the description. Ajay, any parting thoughts?
So yeah, so as you know, Shashank was saying, right, so you guys got to know that it's much more important to look at insurance more from the standpoint of ensuring, you know, your loved ones, and to look at it because it is an expense, right? So most people get trapped because they want probably something out of the premiums. They want the premiums to probably earn, but there are other avenues to earn. So always separate your investments and in your insurance overall, right? And yeah, that's pretty much it.
Thank you so much, Ajay, for clearing my doubt really personally. And I'm pretty sure that you guys have some questions. So please don't hesitate to drop them in the comments below and we will answer that for you. In fact, Ajay himself will answer it for you here. Thank you so much, Ajay. And folks, we will see you in the next one. Happy insurance hunting.